Let's talk a little bit about tax residency today. I'm chatting to Vincent Hayes. Welcome, Vincent. It's so nice to chat to you.
Thanks, Andrea.
So tell me, I know you've posted an article recently on the 6 points of tax residency, the details about it. It's really important. I want to know more about it. What is happening on the 1st of March? Let's start there. Are there new rules in place?
1st of March just really kind of said that if you earn more than 1.25 million rand offshore,
Okay.
while you're still a tax residency in South Africa, you will need to declare it and you'll pay tax on that in South Africa, given the double tax agreements with different countries.
Okay.
So I just kind of, when clients come to me, the most important thing is really about tax residency as opposed to financial immigration.
Okay, so what is the difference between the two?
Financial immigration is an application to the Reserve Bank and to SARS in South Africa, and that's really to put all your investment accounts into a block account, close all financial ties with South Africa, and ship your money out of South Africa.
Okay.
Whereas your tax residency, the financial immigration is really, it's your decision whether you want to do it or not. So mostly, you don't need to do it, really.
Yeah, it's a bit of an emotional decision, right?
Exactly.
Yeah, I know.
Whereas your tax residency, that's given. So
Yes.
you move to Canada, you settle here, you start earning a salary, and so by default you become a tax resident here, and then you have to share your worldwide income with the CRA in Canada.
Okay, great.
Whereas in South Africa, if you are not deliberately becoming a non-tax resident in South Africa, it will then mean that you will need to show your global income
Okay.
back to SARS in South Africa.
Okay.
So it's a really important point for that reason, but then also about your capital gains tax one day. If you start accumulating assets in Canada,
Okay.
now just think about it.
Yes.
You come over to Canada, let's say when you're 40,
Okay.
you work for 25 years, till 65, you
Yeah.
build up some asset base,
Yeah.
and then you forgot to file your non-tax residences out in South Africa. You build up asset base. So theoretically, SARS could come back in 25 years, so theoretically,
Yes.
and say, where's the capital gain
Oi.
on
Problem.
the assets you've built? Now, whether they would do that or not, I'm not sure, but that's...
But it's still capital gains, and that's what we need to worry about. So if you want to find out more about tax residency, you can go to my YouTube channel where I interview Vincent on the details of tax residency. Really important to get up to speed. And if you're concerned or you're unclear about your tax residency in South Africa, if you're coming to Canada or from any other country, check out the YouTube channel. Thanks so much for listening.